So let me just go on to the charts and we can have a look at, firstly, Aussie CAD. So weekly time frame, I might just zoom out a tiny bit. And so your question is, so what's the bias in this scenario? So if we just take a step back and ignore price action here, we've got these recent highs, so we see bullish sentiment. And then when we start to see that aggressive move above those highs, that's when our sentiment is bullish. Still here, I know it's bearish moves, but still bullish, making new highs. And now we're failing to make new highs. And this is where, okay, the original bullish bias we had now coming back into overall this ranging price action becomes a bit more tricky. But, opportunities and supply and demand can be had here, where you've got 2 or 3 weeks of bearish sentiment. That continuation lowers potential for supply zones. But yeah, in this scenario here, where you've got price making gradual new highs, you want to be favoring demand zones on the weekly. You've got clear bullish momentum until we get to this point. Now it's ranging and then the bearish move. Australian yen, very much bullish, and then you have a really sharp pullback, sharp move back up. So in that instance, it can be quite difficult to trade. And then we start to see really aggressive moves, breaking some key lows on the weekly. They sent your bias now on the weekly is bearish, and depending where this goes, starting to see bullish traction, equal highs, and then we're starting to break, and then we're approaching key levels again. So we just have to, even if we're looking at trading opportunities at that level, if you're on the 1 hour looking at supply and demand opportunities, they're most likely going to be very valid, given the fact we've seen continuation of a bullish move. And we can see the rejection at these weekly highs, but don't let that put you off when you're looking at opportunities. Your bias in this instance would be bullish. Just be mindful of the weekly highs.